And moving to global stories, China has earned its stripes in global auto market. It is the world's leading car manufacturing hub and biggest car market as well. But of late, all doesn't seem to be well in the Chinese car market. Trade war with US appears to be taking a toll on auto industry. Sales have plummeted and the slide continues despite measures by Chinese government. The growth in sales have reversed for the first time since 1990, and analysts largely attribute the dent in consumer sentiment to the growing friction between Beijing and Washington. The major brands that invested heavily in China are reconsidering their production scale. Sample this. The Chery Jaguar Land Rover factory in eastern China has the capacity to produce 10,000 cars a month, but of late the plant is running at half of its capacity. US car manufacturer Ford has been the worst performer with sales down 37% last year. Automobile giant Ford is under immense pressure to scale down its operations. Japan Suzuki has pulled out of the market altogether. But will the downturn in China's economy derail its car market? Is there a threat to China's formidable standing in global automobile market? Well, there are no easy responses to these two questions. Chinese government has initiated several steps which executives believe will help revive sales. Well, VAT for the manufacturing sector has been slashed from 16% to 13%. This is prompting car makers such as BMW and Mercedes-Benz to lower prices. As a result, the March auto sales have declined, and this was the smallest decline in 7 months. Also, all eyes are on 2019 Shanghai Auto Show, which is now underway. The auto show will be a strong indicator of how investors view China's future as a car manufacturing hub and market leader. The opening day of the auto show was marked by a clear thrust on electric vehicles and new SUVs from car makers such as General Motors and Daimler. Some firms expressed optimism about road ahead, with luxury car maker Rolls-Royce saying it would likely achieve double-digit sales growth in China again this year. But there is optimism among other auto executives. Some believe China's car market will return to growth in second half of the year owing to government support. There are hopes of trade negotiations between China and US finally finding some headway.
Basically, I'm confident that we will see a better second half of the year. Yes, we had 2 consecutive quarters of decline of the market, mostly driven by the trade negotiations between the US and China, because the economic surrounding of the market is in good shape, is healthy. We are optimistic because we could, within that period, we have been losing a little bit of volume, but we could gain market share. That means we are very competitive in this market.
We could deliver 10% growth in the first quarter in 2019 in China, and it's also driven by our successful new range of products. For example, the new BMW X3 is finding great resonance with customers in China, and I'm quite confident about the premium segment in the automotive sector because of the growing middle class in China.
So while the general mood of auto executives seems largely positive, the roadblocks in China's path to recovery are plenty, and there are certainly many what-ifs, the answers to which may only be known in the months ahead. Right now, there is question mark over where it may be headed.